Hello, welcome to Stockology. I'm recording this video on 14 July 2023. The video name is Getting Started with the Trading with Small Capital. This topic being very close to my heart because my own trading journey has been started with the small capital. I believe every trader after he learns the stock market or trading, he has the basic issue that what to do if I have a small capital and how can I make big. So I thought of sharing few of the ideas so that even you can start with the small capital and make big slowly and gradually and consistently. So let us go ahead. Firstly, you need to make a plan of how much capital you can deploy. Also, plan means a trading plan. You have to make your own trade setup, and for that, if you haven't watched the video which I have made, recipe of making your own trade plan, go ahead and watch the video and select your own set of price action and indicators. Keep it very simple and make your own trading plan and make a disciplinary habit that you will trade only when you see the setup happening in the market and not otherwise. After you do that, uh, with the small capital, you can start with the option buying because there are other derivative segments like future which needs a bigger capital. But for option buying, you can start with the smaller capital. Initially, you can start with the intraday option buying, and for that, certain rules that you have to follow that we are going to discuss. The first rule is deploy only 20% of the capital for one trade. Now, what do I mean by that? Let us take an example and understand this. For example, this is just an example. If you are starting with the capital 50,000 only, okay? So, first rule is you have to deploy only 10,000 at a time for one trade. Matlab, if you are trading with the capital, total capital 50,000, not a single trade you are going to take with the exposure of 50,000. For one trade, only 10,000. If you are taking another trade, that also can be 10,000 exposure and not more than 20,000 at a time. That means this is the maximum amount that you are going to expose in the market at any given time. So, what will happen out of 50,000, 30,000 will be kept aside and 20,000 max amount will be exposed. Okay, so that 20,000 you can take one single trade or divide into two and take two trades. Now, in 10,000, what you can do if you want to plan 10,000 ka one trade, what you can do? You can choose expiry days for better premium. Now you know that Bank Nifty, Nifty, and even Fin Nifty, uh, especially during the expiry days. Now there are three expiries which are lined up. Like Fin Nifty expiry happens on Tuesday. Currently, the Nifty Bank Nifty expiries happen on Thursdays weekly and monthly, but they are going to implement the Bank Nifty expiries on Wednesday. It will be in the action in some months. So you will get 3 days to trade. Tuesday for the Fin Nifty, Wednesdays for the Bank Nifty, and Thursdays for the Nifty and monthly expiries. So you can choose these days to trade. On Mondays and Friday, the premiums will be higher. So if at all you have to take a trade, take the less exposure. But on expiries days, you can have multiple lots. You can use this amount for your better benefit. So you can choose expiry days. Now the key is find entries with a small stop loss. For that, you need to master your trading plan. You need to do paper trading. You have to practice for taking fine entries with the small stop loss. Now those who trade Bank Nifty, they know that Bank Nifty is very volatile. Okay, Nifty is comparatively better, so you can choose the instrument what is suitable or what you understand or what you are comfortable with and then select it. Currently I'm talking only about indices for the simple reason is that in the small capital you can trade indices, but if you want to trade stock options, then some little bigger capital may be required, or at the latest stage of the month when the even premiums are little cheaper, that time you can plan for some stock options as well. But the basic rule you have to follow that not more than 20,000 at a time if your capital is 50,000. Why so? That I'm going to cover later. Next is decide the stop loss or expected loss amount before that. So that stop loss can be technical. So if you are taking an entry basis of whatever setup you followed, the stop loss technically you have to adhere to that, or you have to decide one loss amount that you can bear, and that loss amount has to be decided beforehand. Now, what you have to do is aim for 5% profit only initially in one trade. So, let us have some conservative and doable goals. Now, those who do option trading, option buying trading, they know that 5% is easily doable, achievable. In a good day, you can actually achieve 100% or more than that as well. But 10%, 20%, 20%, 25% also is easily doable. Still, we are considering the conservative target, that is just aim 5% profit initially, or a profit amount that you can set for the easier task. For example, if you are deploying 10,000, then 5% is just 500 rupees. So you have to plan for 500 rupees, and if you are deploying 20,000, you have to plan for only achieving 1,000 on a day. That's it. So initially keep a target which can be easily achieved. Then if the trade is going in your direction, you are putting a trade or punching the order, if you are going in your direction, start trailing. Not a point where you are going to make a trade which is going in your direction, then you cannot afford to convert it into loss making trade. So once the trade is going into fair, you can start trailing, your order into the cost to cost. So at least if the trade is getting reversed, you will not exit in loss and you will exit at cost to cost. So if it is going ahead, you can start some trailing method, you can use some trailing methods and start trailing. Minimum 5% is what you have to aim for. More than that, more the merrier. Exit if decided stop loss is hit. No hope. Whatever technical stop loss or the expected amount. For example, you have decided that I will only take maximum loss of 1,000 rupees per day. So if you can see that your trade is not going in your favor, not going in your direction, and you're in the loss of 1,000, exit. First exit, there shouldn't be any hope. Reanalyze, and then you can re-enter if you are getting a better entry. Otherwise, just stop there only. Just these simple rules you have to follow and start trading. Whenever you plan your trade, you have to think for the safety first. What profit I'm going to achieve, that is the question, but how much loss I can make, that is the first question you should think of, because already the capital is less, and the less capital is your weapon that you have to preserve. How much money you will make, that's the second question, but capital preservation and protection, that comes first. So what you can do, you can put stop loss in your system. If you are entering into any trade, you can do stop loss in the system, so that you will be automatically exited from the trade if it is going against you, or manually follow the discipline to exit if stop loss is getting hit. If in a day you are getting two stop losses which are hit, then take a pause. Okay, you need to think that there are certain things which are wrong in my analysis, or the market is very choppy, or whatever it is, you have to stop. No revenge trading, no trying to gain that whatever lost and something. Take a pause. It's not the last day of market, you are going to get another opportunity. Take a pause, so that even your mind will be free and you can rethink again how to go about it. This was about option buying, which was the safest and easiest way to start with the small capital. But even option selling you can do with the 50,000 capital, using some strategies like bull put spread and bear call spread. So do your research more about it, and you can plan some baskets in Zerodha as well as in Upstocks, or any other broker that you are using, and you can use these strategies to trade option selling in, I guess, 35,000 to 40,000 rupees itself. Whatever trades you are doing, whether it is option buying or option selling, you have to maintain a trade journal. That's a compulsory. That will help you to review at the end of the week or at the end of the month that what is your hit ratio, how much discipline you have followed, how many trades you have taken, are you over trading, are you over leveraging, what is your quantity, are you following your rules. So whole trade journal will be like your mirror, that what you have done, but you have to maintain it with the consistency and discipline. So this is just a template which I have shared. You can have your own trade journal, you can maintain an Excel or a simple diary. So you can write serial number, date, instrument, mean what index you are trading, what PE or CE that you have selected, how many quantities you have, what is your view. Important is reason to enter. Now, why I have mentioned over here is, whenever you will write ki why I'm entering here, you will be reassessing that whether I'm entering right or not. So if your view is bearish, you can write as this is crossover is happening, or it is below CPR, whatever trade setup you are following, you have to enter a short detail over here. Result is final outcome in terms of profit or loss. So the amount you have to enter over here, and a comment. Comment is any comment, like if it is a good profit, good loss, bad profit, bad loss, or do you follow the setup, or whatever comment you want to write about that trade, you can write in short. This is just a template, you can have your own version, but maintaining a trade journal will be helpful. Coming to the review of the month, now we are taking some examples. Considering 20 days are there in a month, and you are trading for all 20 days and trading intraday. Now, let us take a good example. If you are able to achieve 5% goal for at least 15 days, and you are hitting stop loss of 5% for rest of the 5 days, then what will happen? If 5% goal is achieved for 15 days, then the net profit will be 15,000. And considering this 5% loss, ideally this loss amount should be less. It can be 2% or 3% and not the equal, but still we are considering the higher value. If at all you are making loss of 5% for 5 days, then your loss amount will be 5,000. So if you take a net, still the net profit will be 10,000 plus. So on a capital of 50,000, still you are making 10,000 in a month if you follow the discipline. The last line is very important. Now let us consider an example where 10 days you are making profit and 10 days you are hitting the stop loss. That means net is zero. Still your capital is saved. Okay, there is no problem. Now the loss making scenario. If 15 days in a row you are making loss of 15,000, and 5%, I mean 5 days only you are making profit, then your net loss would be minus 10,000. And that is why precisely in the first instance only I asked you to deploy only 20,000. So rest of the amount is saved for the gray days. Okay, so even if any month is bad and you're making loss, still the majority of your capital is still preserved. Okay, and obviously if such scenario is happening, you have to rethink on your trading plan, what is going wrong, why you are making loss. You have to go back to your step 1, make the changes in your plan, make the necessity changes in any other system that you are following, and then restart with the same process. So how do you find this? Easy? Yeah, after listening to that you will see, array, this is very easy, but it will not be, mind it. The main thing is working on your mindset and the discipline part and the consistency part. So yes, if you can manage that part, then this technicality is not at all difficult. You have to trade manually you have to trade mechanically, you have to trade, and not emotionally. Follow the system, follow the stop loss, and that's it. Then that is how it will become easy. So mindset, yes, discipline, consistency, most importantly patience. So this is something what you have to follow and to get the result. Coming to the last portion of this presentation, after listening to this, I would like to hear your review, your comment on that. That how do you think? Will it help? Will it not? What is your feedback on it? And if you think it will help, then you have to ask yourself a question: are you a thinker or a doer? Okay, so type in the comment box that it was helpful and you are a doer. Thank you and wish you all the best.